This is the Daily Market Comment for Wednesday, February 16th by Mario Sajikiriakos. I'm Christina Marujos, and thank you for joining us here at XM.com. A sense of optimism has returned to global markets following reports that Russia had withdrawn some forces from the border with Ukraine. Equity markets came back swinging as traders priced out geopolitical risk and loaded up on riskier assets again, betting the peak of the storm had passed. In the FX space, the signs of de-escalation translated into a stronger euro amid hopes that Europe won't be forced to impose crippling sanctions on Russia and cut off its own energy supply in the process. The euro advanced the most against the Japanese yen, which suffered a double whammy as safe haven demand faded and global bond yields edged higher. The situation remains fluid and sentiment can turn on a dime, but for now, financial markets are trading like we are out of the danger zone. In the commodity sphere, gold prices came off the boil as the perceived risk of an invasion declined. Real Treasury yields have started to grind back higher, which reduces the appeal of non-interest-bearing assets like bullion. This is where the real battle begins for gold. If bullion can slice above the $1,880 region in this environment, it would be a strong sign that the path of least resistance is higher. Crude oil prices came under pressure too after Putin said some troops were being withdrawn. There were also some encouraging signs in the Iran talks. The supply side of the equation is therefore looking more bearish as U.S. shale producers are also ramping up production. That said, markets are very hungry for oil right now. Future contracts are still in extreme backwardation, a pattern that indicates traders are willing to pay more for near-term supply. As such, some modest increase in production might not break the uptrend entirely, but rather slow it down. The US dollar will be in the spotlight today when the latest retail sales numbers and the minutes of the most recent Fed meeting hit the markets. Traders are betting the Fed will take a sledgehammer to crush inflation with 6.5 rate increases already priced in for the year, so every release is crucial. The worrisome part is that the dollar hasn't been able to capitalize properly on positive data surprises recently. When a currency cannot rally on good news, that's usually a sign of exhaustion in the trend. If retail sales exceed expectations, for instance, and the dollar cannot rally powerfully in response, it would be another sign that the uptrend is losing power. Thank you for watching the Daily Market Comment here at XM.com.